This is a half-ounce platinum coin. Now, platinum is worth about $965, $66 today per ounce on the market. But what if it were worth $1 trillion? Well, that's what we'll be discussing with Steve Hanke, professor of applied economics at Johns Hopkins University. Professor, welcome back. As we're speaking today on Thursday afternoon, Thursday the 30th of September, the Senate has passed a stopgap measure to continue funding into December to avert a government shutdown. They're going to be deliberating the debt ceiling debate well into October and hopefully resolve that before the October 18th deadline. Now, the government does have another trick up its sleeve. I'm going to read an article written by my colleague here at Kitco News, Anna Golubova, and she wrote that there is a loophole in the law that dictates the mintage of coins, potentially allowing the Treasury Department to mint platinum coins of any denomination and deposit them at the Federal Reserve in exchange for the federal U.S. debt. You can find the wording of this in the subsection K of 31 U.S.C. 5112, which governs denominations, specifications, and design of coins. This clause states, the Secretary may mint and issue platinum bullion coins and proof platinum coins in accordance with such specifications, designs, varieties, quantities, denominations, and inscriptions as the Secretary, in the Secretary's discretion, may prescribe from time to time. So theoretically, the U.S. Treasury Secretary Janet Yellen can order the platinum coin to be minted and avoid a government shutdown if the debt ceiling is not raised in time. Specifically, it doesn't even have to be a giant coin because it doesn't have to technically be made of $1 trillion worth of platinum. The key is they're assigning a value of $1 trillion to a coin and using that to buy federal U.S. debt. Have you ever seen this happen before, Professor? What is this all about?
Idea of a platinum coin of the huge denomination came up really in the Great Recession. That's when the idea first arrived. But what it amounts to is this. I've got like 7 points I'm going to raise with you, David, on this. And so the first point is that the U.S. Treasury wants to issue more debt to finance the government, but with the debt ceiling as a constraint on them, they can't do it. So the second point, enter the $1 trillion platinum coin idea. And that gets into the statute that you were reading, and that is the U.S. Treasury. It isn't a loophole. The mint at the U.S. Treasury issues coins, and you indicated bullion or proof issues of those coins. So the third point, let's say they do issue $1 trillion platinum coin. They issue it and they deposit it at the Fed. The fourth point, the U.S. Treasury then draws on its account at the Fed, and that creates money. So the money supply goes up. So the fifth point, this is a debt ceiling workaround, and that literally is the way it would work, in theory anyway. Now, the money supply would be growing, and the Fed, of course, would be worried maybe about too much growth in the money supply as a result of this $1 trillion deposit that was put on them and being drawn on by the U.S. Treasury. So they'd probably start selling some of their U.S. Treasury bonds to the public, and that would dampen the growth in the money supply created by the deposit of this platinum coin at the Fed and the U.S. Treasury drawing on it. Now, the seventh point is the problem. And this gets into the statute that you were reading from that your colleague had written about. And that is, it's not clear that the U.S. Treasury can actually issue tokens. To make this thing work, you'd have to issue a token, not a bullion or proof coin. Because if you had to issue a bullion or proof coin, you'd have to have the bullion to issue the coin in the first place, meaning that the U.S. Treasury would actually have to buy the platinum for $1 trillion worth of platinum. And there is an issue, therefore, about the statute and the interpretation of the statute. one expert in this field, Will Luther, I spoke to him earlier today. Will is of the opinion that the U.S. Treasury can't issue a token. If you read that statute, as you just did, David, it's talking about bullion or proof. And if that's the case, if they're hemmed in by bullion or proof, that means that the whole thing would be a wash and you wouldn't be able to increase the money supply because you'd have to buy the bullion in the first place before you minted the huge coin that you would have to have. So that's the nub of it, is that it's really a gimmick, I think, that some bright Washington bureaucrat dreamed up when they were in the shower some morning, and it's not going anyplace. It's just a theoretical idea that is floating around, and of course the statute, if you read it, it looks like they can do this, but it's even questionable about whether they really can do it, because the only way that it would work is if they issued a token, not a bullion coin.
Right, but just on your point about a large coin, it doesn't have to be a large coin. It could be any coin the size of this that I'm holding in my hand right now, this half-ounce platinum coin. Well, it could be 1 ounce. I mean, whatever size they deem it necessary. But the point is they're just assigning an arbitrary value to that coin, right? I mean, so what's stopping them from doing that to anything? I mean, why haven't they done that already to increase the money supply and just buy themselves out of debt? I mean, this just seems like a very convenient loophole.
Well, it's a workaround for this debt ceiling issue and they haven't done it in the past because there's this debt ceiling always gets lifted. So they can issue debt. The U.S. Treasury wants to issue debt to finance the government, and they usually are never bound in reality by any kind of debt ceiling. The Congress always lifts the ceiling, so they just issue more paper debt, more bonds, and that's the end of it. So the workaround that we're talking about never comes into play as a reality. Now we're talking about it as a hypothetical. You're telling me, well, what if they don't increase the debt ceiling, and by October 18th, that's it? We hit a stone wall. What do they do then? And one proposal, or one idea, shall we say, floating around is this idea of a platinum coin. And it would work just like I said. They'd issue the thing as a token, by the way. They'd deposit it at the Fed and they'd draw on it. They'd have an account at the Fed and they'd draw on it. They'd spend money as a result of that. And that's what would work. Normally, they don't have to do this because they issue bonds instead. That's how they're financing the deficit. And who buys the bonds? Well, the Fed buys a lot of the bonds and monetizes them.
That's right. Yeah, I mean, there is, that was my next question. I mean, tokens, bullion, coins aside, there is a mechanism right now where the Federal Reserve can directly buy federal debt from the Treasury, right?
Yes, and that's what they've been doing. Ever since COVID started, they've been monetizing most of the debt that's been issued by the U.S. Treasury has been monetized, and it's on the books of the Fed. And the money supply, of course, as a result, has had a tremendous increase. And as a result of that, we talked about this the last time, as a result of that huge monetary increase, inflation is always and everywhere a monetary phenomenon. I'm quoting Professor Milton Friedman. That is the way the world works. And we have had an excessive amount of monetization of the debt, money supply increase, and as a result, we will have inflation, more inflation, and it won't be this temporary thing they're talking about. It'll be the real deal, and depending on exactly how you make the calculations, you'll end up, as I said, by the end of the year. My forecast is it will be probably between 6 and 9% inflation. For next year, it could be 4 to 6%, something like that. Now that's much higher, double or triple the inflation target of the U.S. federal government, of the U.S. Fed, of 2%. So we're going to have a lot of inflation, and that eventually will kick in, and that will do what? It will help things like gold, which has been in the tank for the last few weeks because everybody thinks the inflation is going to be temporary and it will go away and it won't be a problem. Well, that's not right. The money supply has increased tremendously. We will get more inflation. It won't be of a temporary nature, and that will work into all these metals markets, and we will see some fundamental strength based on inflation being realized. The inflation expectations will start being realized, but they aren't right now. If you look at the Hanke gold sentiment score this morning, it was still in negative territory. It's been flopping around, but over in the negative territory all week with all this talk about the budget tapering and shutting the government down. Now we had some news today. You announced it. The Senate, the Congress just passed a temporary sustaining
Right.
bill that will let the government keep working. Well, that was bullish for gold. Gold's up over $30 as we speak right now.
Okay. So bottom line,
That was a bullish thing for gold because the government's not shutting down. Going to keep spending money.
that's right. So okay, so it's bullet. Yeah, we'll touch on the Hanke Gold Sentiment Index towards the end of the interview. So bottom line, you don't think they're going to issue a $1 trillion platinum coin to avert a government shutdown? They don't need to. They just passed a stopgap measure. But what do you think is going to happen now to the debt ceiling?
Well, they're playing a game of chicken with that, and it's a little hard to get your head around because Senator Schumer, the leader of the Senate, a Democrat from New York, has been playing games with this debt ceiling thing because he's had an opportunity, and the Congress has had an opportunity to up that limit, change it. But he wanted to wait until the end of the day and create a chaotic situation, and that's what they're in now, a real game theoretic problem. They always up it eventually. How and when and if they will this time, who knows? I just don't have a crystal ball and I can tell you the answer to the thing. All I can tell you is historically they always increase it.
Yeah.
At the end of the day, they play political games with the thing, trying to nail one party or the other party or some individual for shutting the government down or causing potentially a debt default and things like this. But ultimately, it never happens. They always increase it. So if history is a guide, David, they will increase it.
So it's nothing more than a political tool at this point. I mean,
it's a great Washington political game that we've seen it over and over again, and that's what these politicians they're experts at political games. Instead of running the country, they're great game players.
Sure. Okay, but what if, just hypothetically, what if the U.S. were forced to default on its existing debt obligations? I mean, you've got a number of finance textbooks behind you, many of them which probably already state or have stated that the U.S. Treasuries are AAA. They're risk-free by definition, and the government cannot default. It's an impossibility. That's what traditional finance is teaching us, right? So this would completely rewrite all the textbooks behind you if it were to happen.
Yeah, I mean, theoretically, I suppose it could. It hasn't, but we could become third world. There are a lot of, Lebanon. I've just been working on Lebanon this morning. Lebanon, of course, they defaulted months ago on their euro bonds, and they're not the only ones. I mean, look at Argentina. If you want the world's greatest deadbeat to get it, when you look at the magnitudes of defaults, look at Argentina. So you're putting a hypothetical out there. You say the U.S. that wants to become a third world country. This doesn't make any sense. Look at what the markets are doing. The dollar has been on a tear, a bullish tear the last week. That, by the way, that's probably the main reason gold has been on its back over the last 10 days or so. The dollar is absolutely it's up at its, I don't think it's been this high almost for a year now. It's very strong. And look at the bond markets and so forth. If people really thought this default was in the cards and it was real and wasn't just a political game in Washington, the markets would be tanking. They're not.
I remember Moody's downgraded U.S. Treasury bonds sometime in the last decade. So, there are some ratings agencies that don't consider U.S. Treasuries to be absolutely, completely risk-free. What is your opinion? Do you think there is even a 1% chance of a U.S. government default?
You know how to put a guy in a corner, David. 1%. 1%. That's okay. 1% or less. That I would say yes, it's possible. I mean, anything is possible with those kind of odds. So you gave me in a way you gave me an out. You said 1%, so I say 1% or less. Yeah, that's possible.
All right, great. Let's talk. I mean, it's still not very high.
For that.
Anything's possible, like we've seen in 2020. You're absolutely right, Professor.
Oh, exactly.
Okay, let's talk about finally your gold sentiment index. We'll put the chart on the screen here, and we'll put a link down in the description below on how people can sign up and track it live. So you were saying how the Senate passing the stopgap measure is bullish for gold. Explain why it's bullish for gold, Professor.
Well, the government's not going to shut down. We're going to keep spending money. So that's the bullish part of the thing. Is that we're not going to have any kind of disruption or bump in the road, at least for the foreseeable future, with this passing of this temporary bill. So I do think that probably motivated the market. And, it's up pretty good over $33, something like that. It's up right now as we speak. So the question, though, is all of this back and forth about talking about tapering and whether the government's going to shut down and whether the debt limit is actually going to be raised or whether we'll default. All of that's pretty bearish, and that's coming into the Hanke Kaufness gold sentiment score this week. It's been on the bearish side, flopping around a lot because there's also been some talk about inflation. Now that's bullish. That's bullish. So remember, what does the sentiment score actually do? We mine the text of articles coming out on an hourly basis, and by looking at the words in those texts, in those articles, we can come to a conclusion of, is the article bullish or bearish for gold? And the word taper, for example, is a bearish word. The word inflation is a bullish word. Shut down is a bearish word. Open is a bullish word.
I see.
And so you get this pattern. You're mining the article. You're saying, okay, we got 1,000 articles coming out this hour dealing with gold, and are they bullish or are they bearish? And the Hanke Kaufness gold sentiment score comes up with a reading on that, and it's been bearish. It's been flopping around all week but it's been on the pretty much the bearish side, and gold has been pretty much on its back all week.
Yeah.
So if people want to participate and receive this free, they can do it. And I think you've got the identification of the website where they can plug in and do that and receive every day at 8 in the morning. They'll receive the score, the sentiment score. What's the sentiment in the market? What's the temperature in the market? Or as you put it very well, what's the barometric pressure? You brought that up. I like that.
That's
the
right.
Barometric pressure. If the barometric pressure is real low, there's a pretty good chance there's a storm on its way.
That's right.
And all week, the barometric pressure has been pretty low. It's been moving around, but pretty low. Kind of stormy weather.
All right. Stormy weather, potentially up ahead for gold, but instead of passing a stopgap bill is bullish. All right, Professor, thank you so much for your updates and for explaining why at $1 trillion platinum coin is unlikely to happen. We'll see if the sentiment for platinum moves up on that news. We'll see if the price of platinum moves at all. That should be interesting to follow. Okay, Steve, thanks for coming on the show today.
Thank you, David. Great to be with you as usual.
Great to be with you as always. And thank you for watching Kitco News. Don't forget to subscribe to our YouTube channel and follow the Hanke Confidence Index in the description down below.